Actually, crises usually lead market players to be cautious, favoring strategies and assets that appear to be the most secure. But however, this is not exactly or not necessarily what emerges from the 2020 figures. The first surprise is that the results of the investment market as not as bad as we feared, which is quite a good news. The volumes invested in France exceed 28.5 billion euro. This is clearly and certainly much less than the results of the previous year, in which an all-time record was broken with more than 42 billion euros, and the decline is 33%. But everything almost came to a standstill during the first lockdown or the first containment. We weren't sure we would be able to reach even 20 billion euros. So we would have signed, I think, with both hands for this figure of more than 28 billion. Another indication of the resilience of the French market is that it remains 14% above its average on a 10-year period. Also interesting to see how the market has behaved during this crazy year. You can see it on this graph, which shows you the quarterly volumes. After a very good start to the year, even better than the previous year, the market came to a sudden halt in the second quarter. This is the effect of the first lockdown. Then the market slowly picked up again in the third quarter, which is probably the most interesting for us. It continued to accelerate towards the end of the year. The second lockdown, which lasted from the end of October to the mid-December, so quite during the full quarter, therefore had a much less severe impact than the first one. And for instance, during the fourth quarter, we reached a 10 billion euro volume invested in France. We have a look on the geographical breakdown or geographical distribution of the investment volume. We can see that the Paris region remains the clear leader of the French market. It concentrates 66% of the volumes invested. But however, the year 2020 has also consolidated a trend that has been observed for several years in the French market. And this trend is the rise of alternative locations to the Paris region and the rise of national portfolio, in which, I have to be honest, there are often assets from the Paris region, but it's quite impossible to do the share of the Parisian assets within this portfolio. There are several explanations for this phenomenon, which may seem surprising in a context that could have favored refocusing on the main market. The first explanation is the rise of domestic investors who are well aware of the opportunities offered by the French regions. There's another explanation, I think, is the desire of investors to position themselves on lower metric values and lower unit amounts. There's also the lack of good opportunities in the Paris region. In total, the Paris region has experienced a more significant drop in investment volumes than the regions, with less 37% against 27%. I was talking a moment ago about domestic investors. You have here a look on origin of invested funds, and domestic investors have very clearly regained the pole position on the French market during the last year. Their market share has risen from 56% to 68% in 1 year. This phenomenon is quite usual in times of crisis. However, this refocusing has been less important than what we have seen in the past. It's important to say that some international investors have remained quite active. This is, for instance, the case of the Germans, who have been present for a long time on the French market and who have maintained their interest. It's also the case of the North Americans, who often have a more opportunistic strategy. We have to point that among the North Americans, there's a big or an interesting dynamism of Canadian investors. Conversely, investors such as Asian funds, which had abruptly invested in the French market in 2018 and 2019, have stopped their operations. But I have to say, or it must be said, that this phenomenon was expected even before the explosion of the health crisis. Also interesting to have a view on the type of assets, and it's a bit more surprising if you have a look on the breakdown here. We could think that with the lockdowns, which have led to the closure of many shops and the rise of teleworking, the opportunity to invest in office and in retail assets would have been called into question. The French market, which is largely focused on Paris office assets, is also exposed to the poor results of the rental market in the Paris region. With a take-up of 1.3 million square meters in 2020, it has achieved its worst performance in 20 years. And the vacancy rate has increased from 5% to 6.8% in 1 year. That's a surprise. It's the two types of assets that have held up best, falling by only 29%. Conversely, logistics and services, whose activity have been at the center of the news, posted a much greater decline between 32 and 65%. There are several explanations for this surprising phenomena. The first one is the investment market is quite a big boat with slow movements, and it takes a long time for the helm strokes to be translated into the reality. And the first 9 months of the last year, thus largely worked on deals initiated before the health crisis. There's another explanation. I think it's a segment such as services assets, for instance, still remains a niche market with few investment opportunities and reduced unit amounts. And many signs of interests will take time to materialize. If you have a look on retail investment market, this segment has been driven by some and few major transactions, such as the sale of a portfolio of shopping centers worth more than €1 billion, and with the sale of some premium mixed-use properties, located on major shopping streets. And well, concerning the office segment, the well-located office assets continue to be perceived, I think, by most of the investors as low risk, despite the deterioration in the rental market. In line with the above, the analysis of risk levels in the office segment also holds some surprises. Last year has indeed been marked by a lesser domination of core assets, whose share has fallen from 82% of the invested volumes to 70%, which is a big decrease in 1 year. And there's two main explanations for this phenomenon. The first one is the weight of deals initiated before the health crisis and which took shape throughout the year. And the second main explanation is the fact that it was more difficult last year to close the giant deals with a unit value of more than €500 million, which mechanically disadvantaged core assets. Finally, for this short overview on the French investment market, a brief overview of yields. There have been very little movement with regard to prime yields, but there's nevertheless an interesting phenomenon: the resumption of the contraction observed in the logistics segment, with a prime that has fallen to 4% compared to 4.25% a year earlier, and the one observed in the office segment, with a prime that now stands at 2.75% compared to 2.9%. This shows, I think, the interest of investors in core assets, and the fact that if the market share of core assets decreased, it's mostly due to the lack of opportunities. Conversely, secondary rates are tending to rise, reinforcing valuation differences in the French market. And this opens up some prospects for investors with an opportunistic and value-add strategy.